Dustin Padgett with Big Sioux Wealth Management. In our first election newsletter, we laid out the history of the markets and how election results had very little impact on long-term investment returns. In our prior newsletter, we laid out 4 potential outcomes to consider. From a macro perspective, our view is that the election is unlikely to have a large impact on the overall direction of the markets. Nonetheless, on a micro level, we are likely to see certain industry groups and individual companies impacted differently. From an investment strategy standpoint, the minor changes we intend to make may be only carried out in the event of a blue wave. These potential portfolio changes would be in response to policy changes and made objectively without political bias. But even so, some strategy changes may not be carried out because of the markets already pricing in the impact of a possible election outcome. Clients who are invested in our discretionary portfolios can take solace in knowing that we are actively monitoring and managing their investment. In this newsletter, we take a look at how different sectors might be affected due to potential changes in taxes, trade, fiscal policy, and regulation. With the large majority of pollsters predicting a blue wave, we felt it necessary to spend most of our time discussing what a Democratic sweep would mean for financial markets. While it's easy to speculate on how various components of the market will perform based on the outcome of the coming election, basing one's investment decisions on politics is never prudent. If history is any guide, it is impossible to make such predictions consistently and accurately. But remember, your portfolio is not invested in the president or Congress. Rather, your portfolio is invested in the economy and the corporations operating within it. Don't allow your political views to derail your investment plan. Keep your investment strategy focused on your goals, risk tolerance, time horizon, and always do your best to think long term. We have developed strategies to keep our inherent political biases in check and will not be adjusting our portfolios drastically. It is our opinion that markets tend to adapt and move higher regardless of who wins. Perhaps Jeff Sott of Sott Strategy put it best. Presidents don't make markets. Markets make presidents. As always, we appreciate your business and hope you enjoy the newsletter.